Hello, everyone. My name is Austin Cassidy with Tanner Realty Group, and welcome to this week's buyer's seminar on how to buy a home in today's real estate market. We have a lot of information to cover, so I'm going to jump right into our PowerPoint. Feel free to stop me at any time in the chat with questions. I'd be more than happy to answer them so you make sure you get the most out of this seminar you can. Again, I will share my screen. So like I mentioned, my name is Austin Cassidy, and it's so great to have you here if you are watching. Buying a home can be one of the most rewarding things you do in your investing journey or in just having the pride of home ownership. So we put together this seminar to give you the education you need to buy a home in today's market. So let's get started. First question here, like I mentioned, put your questions in the chat. If you have any questions at all about buying a home or what the market looks like, put those in the chat. We can answer them right away. So what we'll cover today, we'll go through 5 different points. First, the fears versus facts about buying a home. Second, the realities of our market today. The 6 simple steps to home ownership, financing, and then what are your next steps? So let's jump right in. First, let me dispel some misconceptions about buying a home, the fears versus facts. Number 1, I can't afford to buy a home right now. Well, until you do the math, you don't really know what you can or can't afford. If you're paying rent, it's likely that you may be able to purchase a home. You're paying this other person's mortgage by paying the rent. So getting in touch with a lender can help walk you through that process. You may also be saying, I should wait until the market gets better. Well, there's never a bad time to buy the right home. And my job as your buyer's agent is to help you find a good buy and ensure that you have the financial ability to maintain that investment and hold on to it. Every market has an opportunity. It just may be a little harder to find. And that's why you partner with professionals to help you find those deals. Number 3, I don't have the money for a down payment. Well, there's a variety of down payment options, and the myth of a 20% down payment is no longer. You can get into a home with a down payment as little as 3% with different down payment options and assistance programs. So you just need to talk to a lender to see what you can do. Number 4, I can't afford to buy my dream home. Well, a lot of people who are buying a home can't afford to buy their dream home right now, but the best way to take a step towards buying your dream home is to buy your first home, second home, just continuing to build equity through your homes and get up to that dream home when you have that financial stability. Number 5, I can't afford to buy a home because my credit isn't very good. Well, there's always options, and shame about your credit doesn't you any closer to buying a home. And typically there's 2 types of credit challenges we see: poor credit history or no credit history, and both have solutions. Even if you have poor credit, you should still talk to lenders, and you might be pleasantly surprised at the outcome. And if you can't qualify at that time, they can put together a plan so then you can be mortgage worthy in a span of, let's say, 6 to 12 months, just depending on your situation. You may be able to do it sooner. It may take a little longer. You just need to talk with the lender, put together a plan. Number 6, I should wait until I'm certain about my domestic future, my job, where I'm going to live forever, anything like that. And people often feel that they should wait for things like this. However, by buying a house now, you start to build equity, and that equity can then be rolled into your next home, whether it's across the country, whether it's with a new partner or anything like that. Buying that first home can put you bounds ahead in your long-term vision to get your dream home. Number 7, buying a home seems way too complicated. And I don't think anyone's going to tell you that buying a home is easy. However, partnering with professionals like myself, with lenders and other people in the process, their main job is to make the process as easy as possible for you. And that's why we're here, to answer your questions about the market and transact and make your transaction as smooth as possible. Number 8, I should pay off my student loan debt before buying a home. Well, student loan debt doesn't actually prevent you from buying a home. And as long as you're making payments on time, you're building good credit. And this can help you get your loan by building a credit history. So if you have student loans that you feel like, well, maybe I'm paying too much per month, there are some programs where you are able to decrease that payment, and you just need to talk to a lender about what you can do. So why buy now? Well, home ownership may be the best accidental investment, and with a little bit of knowledge about it, the best intentional investment you make. And my job is to help you understand these factors that turn it from an accidental investment into an intentional investment. So why now? Well, interest rates are still at historic lows. Mortgage rates are still relatively low at 5 to 7%. And over the past 45 years, 30-year fixed rate mortgages, which are really, really common, ranged from about 18.63% in 1981 to 3.31% in 2012. In the past 5 years, rates have remained fairly low, below 6%, dipping beneath 3% in 2020. And there's no guarantee rates are going to stay this way because they can always change. So by locking in your rate now, you can always refinance if there's a lower rate that becomes available. But once there's a higher rate, you're kind of stuck. Also, your long-term investment grows. You get equity. Equity is the value of your home, which can grow every year. And this also helps with value appreciation and debt paydown. You're building equity in your home that can be used in the future. Lastly, you get a pride of home ownership. You have stability and security in where you're going to live and in your payments on your home. You have a sense of community with those around you, if anyone's around you. Maybe you want to be out in the woods on 20 acres. Whatever it is, you have the sense of community that you want. You have the freedom to customize. If you're renting, you may not even be able to paint your walls. And tax benefits with homes, there's a ton of tax benefits for homeowners. Contact your tax professional for questions about that. And then also just wealth building through equity. Well, there's a lot of great reasons to buy, and there's also reasons not to buy as well. Number one, if you're changing jobs soon, this can affect your ability to get a loan because lenders want 2 years of employment records with the same company. And if you need time to work on your credit score, that may make you put off buying a home right this second as well, because again, this affects your ability to qualify for a loan at this time. Also, if the choices in your area are out of budget right now, you may need to work on just increasing income, making your debt to income ratio better as well. You can just start saving up for that home so you can eventually get into a home in your market. Lastly, if short-term ownership. If you are looking at too short-term of ownership of your home, you may not have enough time to build up the equity you need. So when you move into that next house, you're coming out net positive. It takes some time to build up a large amount of equity. And so if you're looking to move out of the state, out of the area in maybe 1 to 2 years, you may not have enough time to build that equity. So let's talk about the realities of our market. Here in Clark County, Washington, our average home price is over $500,000. And this has increased over the past several years quite dramatically. And so now let's talk about what type of market we are in. And we classify this through saying whether it's a buyer's or seller's market. It's a measure of supply and demand. How many houses are available for sale at any given time and the number of buyers. In our market, we currently favor the sellers because we have a low inventory, and there's one caveat to that. Well, with interest rates slightly rising recently, we have started to see the buying pools start to shrink and our inventory starting to rise. So we are starting to see a shift in the market. And if you have more questions about that, feel free to reach out. However, we are still technically in a seller's market. Now we're going to get into the 6 easy steps of home ownership. And these are the steps that get you into your new home. And my job is to guide you through all of them. And there is a step 0, if you will, and that's to go over to TannerRealtyGroup.com. We have a ton of information for buying, selling, We have a blog where we put real estate news, our podcast. We just have a ton of information for you to continue to educate you. So start there. And if this is your first time joining us on this seminar as well, your questions are going to be answered as well. So let's jump right in. Step 1, find and hire your agent. Well, you found them. Hey, nice to meet you. No, I'm just kidding. When you find your agent, typically there's 2 real estate agents involved in every transaction. One agent represents the seller and the other represents the buyer. And when you're choosing a real estate agent, you want to make sure you do your research. You need to ask about their experience, their knowledge of their local market, and their negotiation skill, and find one that suits you, suits what you need, suits your goals. And if they've earned your trust and provided value, that means you can choose them as your buyer's agent. If you choose me to be your buyer's agent, as your buyer's agent, I commit myself to educating you about the market, analyzing your wants and needs, steering you to homes that fit your criteria, not homes that don't even fit what you need. Coordinate the work of other professionals, negotiate on your behalf, and solve any problems that may arise. Once you do choose your buyer's agent, the first step is going to be signing a buyer's representation agreement. What this does is it sets mutual expectations in writing between the 2 of you. This commits me to finding the perfect home for you, and it confirms exclusivity between both of us, that I represent you and you allow me to represent you alone. So when should you hire your agent? Well, on this next slide, I'm going to go through the timeline of a home purchase, but we're going to work back from when you purchase the home all the way until when you find your agent. This can be a lengthy process or a short process. It kind of just depends on your certain situation. We're just going to do a very standard example of this. And if you need to kind of figure out when you need to start talking to an agent, we'll get to that. So we're going to start at the bottom here with last lease payment. So let's say, for ease sakes, January 1st, you want your last lease payment to be on January 1st. Well, that means because you're paying rent, you usually pay before your month of rent or before you need to get out. So you pay January 1st and your lease ends February 1st. That means you need to be into your new home on February 1st. On January 26th, or even earlier, you're probably going to want to start moving your stuff into your new home, so then it's not just stuck in your old rental. That means we need a month to be under contract, which is when we're going through the option periods, including inspections, kind of the title companies going through everything, your lender is preparing the file so you can purchase the home, and that typically takes 30 days. So now we're at December 26th. Well, the first home you look at is not going to be the home you buy. So we need to start looking probably a month or 2 before that as well. So November 25th, you need to get pre-approved before we go out looking at homes. So you need to talk with your lender, get pre-approved, and have all your financials in order in that September to October phase. Well, you want to start working with your agent as early as possible. In this example, we say August or September. But even if you're looking to buy a home in the next year, maybe even a year and a half, you're going to want to start talking with your agent, because they're going to be able to help connect you with professionals, walk you through the whole process beforehand, so you're educated about what the process is going to look like, and that's going to make it a lot easier. So if you want to buy a home and be in your new home by February 1st, you're going to want to start talking to your agent maybe 6 months in advance, and that's not a bad thing. You want them to be able to educate you. And if they're not willing to sit with you for 6 months, educate you about the market, get you in touch with the people that you need to be in touch with, maybe they're not the right choice. Step number 2 is securing pre-approved financing. So this is getting in touch with the lender. And there's some important differences between pre-approval and pre-qualifications, which are used synonymously sometimes. Pre-qualifications are not a formal or lengthy process. It's more of just a conversation. It's not a commitment from the lender, and it's just a rough estimate of how much you can borrow. That's okay when you're kind of just browsing, but when you actually want to start looking at homes, putting in offers, you need that pre-approval. It's a formal commitment from the lender And it states how much you can borrow and at what rate, and it makes you a stronger buyer in the eyes of the seller. So how can you who to talk to when it comes to lenders? How do you choose one? Well, we have several vetted and approved lenders that I can recommend. Also, just ask for referrals from friends, people who have recently bought houses. Interview all of them and choose the one who you feel most comfortable. It's really important because you're working with them very closely throughout the transaction as well, and you want to make sure you trust them and feel comfortable with them. Prepare the loan application and get pre-approved, and then determine what to pay and select a loan option. Sometimes you will have options based to figure out how much down payment you want to put down, at what rate do you want to buy down points, all of that, and your lender can walk you through that. So when you go to your lender, you're also going to want to have a budget in mind. You want to identify your expenses, determine the amount you can comfortably spend on your new home, and make simple changes if you need to adjust anything so you can purchase your new home. There's a lot of free resources and worksheets out there on the internet, and if you don't have one, let me know, I can get you one. So let's talk about mortgages. What is a mortgage? Well, when you get a mortgage, first of all, you have 3 decisions to make. Number 1 is your down payment, and this is the first payment you make. This can vary between 3%, 20%, more if you want, of the price of the home. And this, you just need to decide how much, based on your qualification, do you want to put down. It will affect your monthly payment depending on how much you put down. The interest rate, the amount you have to pay on the loan. Sometimes you can buy down points and get a lower rate, or if you put down more money, get a lower rate, anything like that. And you can talk with your lender what the best scenario is for you. And then you need to decide on your term. This is the time frame, and this can affect both the interest rate and your payment. And typically we'll see 30-year or 15-year mortgages. Those are very typical around here. So your mortgage is made up of 4 components, and we use the acronym PITI. P is for principal, and that pays towards the equity of your home. I pays the lender for the loan. T is taxes, pays the state and local entities for owning a home. And then insurance, this pays to protect your investments. So when you talk about, I have to pay my mortgage, these are the 4 components that make it up. So now let's go back and talk about your down payment. And your down payment, choosing how much you want to put down is based on your pre-approval amount. So you need to talk with your lender, and depending on the loan programs you qualify for, you can put down between 3% and 20% or more if you'd like. It just depends on what you want your payment to be. And where will these funds come from? Well, they come from side jobs, savings. They can even be gifts from parents or in-laws. This is just the first payment you make, and it is your decision of how much you want to put down. Once you get pre-approved in your pre-approval letter, you're ready to start looking for a home. However, it is essential that you not change your financial status from the time of pre-approval until you close on your new home. It can affect your loan approval. And the worst thing that could happen is that you open a new line of credit during the transaction, and then you're not able to get that home that you were really, really hoping for, and you have to restart the whole process. This means no big purchases like cars, furniture, etc., and no job changes. And make sure you protect that down payment as well. Step number 3. This is the fun part. We get to go looking for your home. So when we go to find your home, we're actually going to sit down first, whether it's in person or over Zoom, and we're going to visit together, and you'll complete my questionnaire so that I can completely understand your needs and wants, and then make sure that we're sending you the right houses to look at. We're going to learn, I'm going to educate you more about your current market in the current cities and areas that you're looking at, and then we will refine your search so you can look at more houses that will only fit your criteria. So who has been looking at houses? Well, with media and everything, people are looking at houses all the time, whether it's on Facebook, Zillow, YouTube, Instagram. Everyone's showing houses everywhere. Well, once it's time to search, we ask that you go on our website, tannerrealtygroup.com, and that allows us to see what you're looking at as well. You can favorite properties. This allows us to see that this is the type of home I want. And that allows us to serve you better as well, because then we can refine your search based on what you're looking at and your wants and needs. So when we're looking at homes, we're going to be looking at different things. You'll be interested in the layout of the house, the backyard, the primary bedroom amenities, anything like that. And as your agent, I'll be looking at how the house compares to others in the area and any big ticket items that will require repair. Other things you'll want to watch out for when you're looking at houses is the drive into the property. How far is it from your work? Are you going to want to make that commute? Are the yards maintained of your neighbors? Are the streets lined with cars? Anything like that. Do you feel safe? Are there nearby amenities? Just more things to consider than just the home. You also want to consider location, location, location. Well, a single family home is your typical detached home that you'll see. However, there are other options, and these can be considered condos or townhomes, and there's also new construction. So first, we're going to go over the pros and cons to condos and townhomes as alternatives to the single family detached home. And often buyers really like the idea of this. Some of the pros are it's a lower cost per square foot. There's no yard work or home maintenance because the HOA will take care of that. There's amenities such as swimming pools, playgrounds, everything like that. And you have a community around you. There's generally multiple homes in that condo or townhouse complex. Some of the cons, however, though, are shared ownership. You own the space inside the home from wall to wall. There's homeowner fees, the HOA, and shared maintenance costs that can add up to quite a bit of your monthly payment. It's managed by a board of directors, and it's governed by rules around pets, vehicles, noise, etc. So if you're very independent, you want your own space, you have pets that don't fit within the HOA policies, it may be difficult to find a place. New construction can also be an option, and it just depends if it's an option for you. There's good and not so good things about new construction, so let's review. Pros, well, they're new. Their builders generally have good warranties with the homes. You get to pick your features, you lock in a price, and sometimes you can find pretty good deals on these new construction homes. The cons, however, is the features that you're adding onto your house add to the price as well. So that base price that they're quoting you will not necessarily be the price you end up paying because you're going to add on features. The future of the neighborhood is uncertain because they're generally in outlying areas of cities or of areas that have not been fully developed yet. So there's not nearby amenities and there's no firm closing date. There may be a delay with the doors, with the door hinges, with the door knobs, and this can set back your closing date, and it's not firm or certain, which can be a con as well. Step number 4, make an offer and negotiate. So at this point, you found your home and you're ready to make an offer and negotiate to a successful close. And making an offer needs to reflect the true market value of the home. And to help you determine a fair price to offer the home, I will provide a CMA or a comparative market analysis that other properties that have recently sold near that home to make sure that your price is within the true market value of that area. We're also going to talk about the terms, and there's much more to an offer than price. The 6 details, which I'll help you navigate, are the schedule, so when it will close, conveyances, so what appliances stay with the home or go with the owner or with the seller. The commission, so who pays the commissions or fees for the transaction, and for both agents. In our area, it is the sellers. The closing costs, who will pay those. Home warranty, if the seller will provide one or not. Earnest money, and that's the amount that the buyer pays to protect the seller from the possibility of the buyer pulling out of the deal. And this is generally 1% in our area. Any contingencies as well will be put into the offer, and these are conditions that allow you to opt out. For example, after receiving the inspection report and discovering foundation issues, you may want to back out of that sale, and this outlines how you'll get that earnest money back if you back out during that inspection period. And everything is negotiable, and this is where my experience and knowledge will be a big help to you throughout this process. We also get this inspection period, and this is step number 5. There's no such thing as a perfect home, and there will be some repairs needed. From a leaky faucet to more costly issues, you'll find all of this out with a proper and professional home inspection, and we'll negotiate the repairs needed after getting this. And I can help recommend inspectors for this. So the option period, we call this the inspection period as well. This is generally 7 to 10 days after the offer is accepted by both parties, by buyer and seller. We have mutual agreement on the offer. The property inspection exposes any structural or hidden issues, and then we will determine a negotiation strategy after seeing everything that comes up on the inspection report. One thing to remember with the inspection is don't sweat the small stuff. It's really the big stuff that matters. You want to know what you're getting into and make a decision whether to move forward or not with buying this home. You really don't want to buy someone else's problem. So the big stuff that matters are cracks or crumbling in the foundation, cracks inside the house over windows or doors, water stains in the ceilings or floors, faded or worn shingles, plumbing or electrical problems, or mold or termite issues. And just because a home has one of these doesn't necessarily mean that you're going to want to back out of the deal right away. It just means you may want to bring in a professional to see how it can be fixed, or if it came a quote from them, and then we can negotiate for that as well, and not necessarily terminate the sale. You may be able to negotiate and get a better deal. Step 6, you're getting really, really close to closing on your home and being a homeowner. There's just still a few more steps to round out the deal. Before closing, you want to make sure you're keeping yourself mortgage worthy. So remember to protect that down payment. You need to make sure you're budgeting for additional expenses as well. You need to make sure you budget for closing costs, which are generally 2 to 3% of the loan amount, and your lender is going to upfront give you an estimate of what these closing costs are going to be. You're also going to want to make sure you have that earnest money, which is 1% of the purchase price, budget for inspections, which are generally around $300 to $600, depending what you have them inspect and how large the house. Any miscellaneous fees that may come up, 1 year of homeowners insurance, which will be in the escrow account, and reserves for improvements or anything you want changed right away. 3 days before we close, we're going to do a final walkthrough of the home. We're going to look at any repairs that the seller has made to make sure they're done well to your standards and that there's been no material changes to the property while the seller was moving out. Now it's time to celebrate. We get to go to the closing table at the title company. So when you go to title, you're going to want to bring certified funds for the down payment, evidence of insurance, and a valid ID to meet with the notary, and you'll sign. When you leave, you're going to get the settlement statement and a transfer of clean title and keys to your new home. But you need to wait 1 second, actually. When the title company has you sign everything, they're going to send the documents back to the mortgage company. They're going to send the funds to the title company. Title will then send everything to the county, and once it's recorded at the county in the same day, then you get the keys to your new home and you're the rightful owner of your new home. Now that you're a new homeowner, you have to protect your investment as well. It's a major accomplishment, and now you get to feel the pride of home ownership. But you have to keep in mind that I continue to be your resource even after the deal closes, because I can help refer you to any service person you're going to need. You want to make sure you're maintaining the home, keeping an eye on the major system, keep a file of your receipts for your repairs. When you go to resell your home, if there's any major repairs, some buyers want to see those receipts and see what was done, see if it was done by a professional. And then also consider a home warranty. This is a 1-year policy that protects the major systems of the home. And if you want to talk more about what a home warranty is, we have information on our website about that. So once again, I just want to go over the quick commitment to you. And when you're ready to start this journey, I'd be honored to accompany you on that. Number one, I'm going to educate you about the market. And as it shifts, I will continue to educate you about changes. Number two, I'm going to analyze your wants and needs and help steer you towards homes that fit your criteria. I'll coordinate the work of other professionals during the transaction and even after. I will negotiate on your behalf and solve any problems that may arise during the transaction process and help walk you through that. So who's ready to get started? There's really no better time to get started than now. So when you're ready, feel free to reach out to me. Here's my information. Feel free to jot that down. You can find me at austin@tannerrealtygroup.com. Check out our website. And I have one more thing for you guys here, a video that kind of recaps everything we just went through. So give me 1 second and I'll bring that up.
So, you're thinking about buying a home. There are a lot of people involved in the home buying process you should be familiar with. Real estate agents, lenders, inspectors, and escrow will all play a role in your home purchase. So let's talk a little about what these people do. You're going to want to find a real estate agent who is a realtor, because not all agents are. Realtors have a higher standard they are required to follow. Your realtor is going to research the right properties for you, run down appointments and showings, negotiate prices and contract terms, and take the time to answer any questions you may have. As a buyer, you'll want to have a different agent than the one who represents seller. With your own representation, you'll know your realtor is working specifically for your interests. The great part for the buyer is the seller pays the commissions for both agents. That means you as a buyer pay nothing to your agent. Next, you'll want to contact the lender. Lenders can be banks, mortgage companies, and credit unions, and your realtor can give a few recommendations if you need them. The lender is going to ask you about your employment, your assets, and your income. And once you put together an application, they will work on getting your loan approved and getting you a pre-approval letter so you can then start house hunting. Once you and your realtor have found the perfect home for you and you make an offer, it's then time for you to hire an inspector. The inspector checks the extended interior of the home and will provide you with a written report on the home's condition. You can then decide if you want to ask the seller to make repairs and/or reduce the listing price to make up for any issues the inspector finds. Working in the background, we have escrow and title. The title companies do research to ensure the home's ownership can be legally transferred to you, and escrow manages the closing process according to your contract. They coordinate getting your down payment money and the bank's money safely to the seller, as well as getting you the legal title to the home. So that's just a quick introduction to all of the people involved in helping you buy a home. You'll certainly want to learn more, and remember, your realtor is the first point of contact for any questions you may have. We pride ourselves in going above and beyond the call of duty for our clients, so please don't hesitate to ask us for help with anything you need. The buying process can be complex. Now, we hope this video has helped explain it a little more. Please call, text, or email us anytime, and we look forward to helping you find the perfect home.
Thank you so much for joining us today on our webinar. Feel free to reach out anytime if you have. I'm happy to serve you and get those questions answered. Have a great day. Thank you.